Hey guys, libertarian investor here, and I just wanted to, as a part of my trading log, because that's basically what this channel is, uh, I made a purchase today, and you know about my ELF stock. ELF almost, it hit $80 a share for a time, and I bought my first shares, at least in ELF, in the last month at 49. We are doing very well, and my portfolio is way up. Despite the little hiccup with Gil, my portfolio is way up. And today, I could not stop myself. And of course, today was July 1st. It's now coming into the wee hours of July 2nd. July 1st, I bought Lululemon at about $116.41 a share. I am down a few cents from that at the close, but I couldn't resist Lululemon, guys. The main feature of this is that it is selling at a PE ratio of 9.3 at the last time I checked. That's below a 10 PE ratio. What a bargain. And I knew about some of the problems that Lululemon has been having with brand, not only due to a general uh, cooling of the economy, but also some mistakes they made, especially in China. Now, Lululemon has been of late opening markets in China, but they did a yoga event at the Great Wall of China, and they used some kind of gong that wasn't actually Chinese that offended a lot of people. At any rate, there's a lot of controversy. Chip Wilson, the ex-CEO, brilliant man, a man of great vision, but a man who cannot keep his mouth shut. He ended up having to step down from Lululemon about over 10 years ago. He's trying to re-enter because he saw the new management as diminishing the brand, and he has been able to place two loyalists on the board. So it's an interesting unfolding story. And as many of you know, George Soros said, invest first, research later. And it's sort of tongue in cheek. I've done a little research, but I have not done a great amount of research on Lululemon. This is an intuitive buy, and I could be wrong. I'm not even right now having in mind a stop loss. This is a position trade, but it's a trade that I don't mind holding for years just because of the fact that this is intuition. This is belief. I believe Lululemon still has a great brand. But I did some research. In fact, I went on Claude, and of course, I looked up the earnings per share growth rate, the sales growth rate, the book value per share growth rate, the free cash flow, and they've all been excellent until up to this year. So it really is, can they turn around? And I went to Claude and I basically asked, I said, look, give me the bear case and give me the bull case. Of course, the bear case, the worst case scenario for 2026, Claude says here, and of course I'm going to go to the sources and research all this. We're going to read the annual reports, and we'll tell you about it here, but I'm invested. If my thesis falls apart, my thesis is that in the next 2 years, Lululemon will be able to repair their brand. They will be able to get back up to speed, and the stock could go up $50, $60, and I want to be there for that upside. So Claude says America's weakness stops being cyclical and starts being structural. This is the bear case. Alo, Vori, Nike, Skims partnership, and a flood of Amazon Costco dupes have permanently peeled off the price-conscious half of Lulu's old customer base. People I've talked to, there's still a lot of loyal customers for Lululemon, a lot of people that love the brand. And no amount of product newness wins them back. Comparable sales already down for 5 straight quarters. Excuse me. Keep declining through Q2 and Q3 in the low double digits, exactly as management is guided. Management says sales are going to keep going down. Tariffs keep grinding on margin with no relief, and the company leans harder into markdowns to move inventory. And secretly, I'm hoping the stock goes down more because, guys, the one factor that sticks in my mind, a 9 PE ratio. I will buy more on dips of this stock. And again, I'm ready to hold this stock for years. I'm patient. I am not a high volume trader. I am a position trader, and I could hold that position for years. Of course, this is not a value investment by any means. I haven't even priced it. This is a trade. Heidi O'Neill doesn't, and Heidi O'Neill is the new CEO. She came from Nike, and I'm learning more about her. I like her. She's into coaching rather than micromanaging. I like what I read about her, guys. So I resonate with the management. Again, I'm going to try to look at her, see her, and see what I can glean from her personality. That's very important in an investment. Do you trust the management? Right now, my feeling is good. Again, if it changes, I'll let you know. But she doesn't start until September 8th, and given how long product development cycles run in apparel, her fixes don't show up on shelves till well into 2027. So this is a show me story with no near-term catalyst. So again, I'm not in this near term. If it goes up to 200, 250, I might sell it. Otherwise, I'm holding this long term. So what's the bull case? The America's decline is cyclical, not structural. So we recover in the next few months. A brand perception air pocket from the proxy fight and a few product misses, not permanent share loss. As the settled Wilson dispute fades from headlines, and of course this is pretty settled, and negative social commentary dies down, traffic stabilizes, Q2 or Q3 shows a shallower comp decline than guided when the market reads as the first green shoot. What to watch, Claude says, and I tend to agree with this. America comps Q2, Q3. If the decline shallows sequentially, that's the bull thesis confirming. If it stays in the double digits or worsens, that's the bear case validating. And as per Jeffries, a real turnaround likely doesn't show up until 2027. Either way, given 30 of 34 analysts currently rated a hold, so a lot of analysts have my same intuition. The street itself sitting on the fence waiting for that signal, which tells you how generally uncertain this one is right now. Again, guys, the new CEO coming in, I like it. Chip Wilson having a voice on the board, and it would be a dream if Chip Wilson sort of was able to come back to the helm. I don't think that's going to happen, but it would be great. This Heidi lady who's going to be the CEO, spoken very highly of in Nike. However, there were some critiques of her, and she was let go. And some insiders say it's because of her philosophy and her. And another thing that I read on Claude about her, and again, we're going to confirm all this. She is a systems thinker, and that goes into the Gill mistake. Gill was channel stuffing. Gildan Activewear, which is the owner of Hanes, which I sold at a loss. They were claimed to be channel stuffing, and they didn't really give a response. They said, we're not going to address this matter further, which makes them look very guilty. But basically, they were going up to the people they sell to, the wholesalers and so forth, who sell to the populace. They were going to them and saying, hey, it would be terrible if we were to take away this contract. So I want you to buy double of what you were buying before. Or, we'll give you discounts if you buy double the inventory. So what happened was it made the sales from Gill look good on their income statement, and it made their inventory look better because they were getting rid of inventory. However, the channels or the wholesalers have not sold that inventory, so that's going to translate into lower sales in the coming quarters. And they're not going to buy more inventory from Gildan until they sell, because they'll go out of business. They'll be stuck with all that inventory. So the thesis is, or the theory is, that Gill's sales will be down in the next report, and that will probably send their stock down. That could happen. But the main thing is it seems, I don't think it's illegal, but it seems to me to be a very dishonest practice. And it's not long-term thinking. I don't like management and CEOs that don't think long-term. Well, this Heidi lady, who's going to be the CEO, she is known to be a systems thinker, which means she thinks of not only can we just sell this quarter, but are the products selling to the actual consumers on the ground? Nike's not just trying to go and sell things to wholesalers under her or under her department. They were trying to go and make sure that whatever processes were in place were actually getting those sales, which are the final sales that matter to the consumer. That's long-term thinking. My gut tells me she will carry this process to Lululemon, and there will be productive changes. At any rate, this is a turnaround story. I invested first. It's ready, fire, aim. I pulled the trigger, and I'm going to be researching it. And if my thesis breaks, I'll sell it. But as for now, Lululemon is a long-term position trade in my portfolio, bought at 116 and 40 something, and we'll keep watching the price, and we will keep watching developments. I just wanted to tell you about this. I think Lululemon at 9.34 is just too, PE ratio, 9.34 PE ratio is just too tempting an offer to leave on the table, so I took it. Till very soon, guys. We're going to start up the weekly podcast again, and I'm going to be telling you what I think, less from a political perspective, more from a macro and also just intuitive perspective, what I see in the market. How can we make money? How can we get free? How can we make alpha in these crazy markets? So until very soon, it's Javier from the Libertarian Investor. I'll see you guys.